You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com, and co-hosts Alex the Viceroy Jacobson from Options Express, Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, everybody, that rockin' tune means it is time once again for the Option Block, everyone's favorite bi-weekly source for all things options related. My name is Mark Longo from the OptionsInsider.com, as well as from the ever-expanding, ever-exciting Options Insider Radio Network. Welcoming you to this new year, this 2015 for the Option Block. Looking forward to a lot of fun things on this show, including we're closing in on our 400th episode here, so we might have to have some sort of Option Block spectacular forthcoming. Stay tuned for that, listeners, as we figure out what the heck that is going to be. And where can you check out all nearly 400 episodes of the Option Block, as well as everything else we have to offer on the old network? Well, a lot of places, including our website, theoptionsinsider.com. You can find pretty much everything you want to know about options all there in one place. At least that's our mantra. We endeavor to do that every day. Some days we succeed, others we try, but it's a difficult task, as you might imagine. And of course, you can find all nearly 400 archive episodes of Option Block, as well as the other dozen programs on our network, or you can also find them iTunes, Stitcher, Aha Mobile, all those fun places, as well as we baked it all into our mobile app to give you some nice, easy mobile goodness you can put on any device of choice, iOS, Android, even the Fire OS. I was just playing out the Fire one myself the other day. Got my brand new Kindle here for the holidays. So all sorts of fun stuff for you guys to check out our content, and of course to interact with us. We love to hear from you guys as well. And joining me on the old all-star panel for the first session of 2015, a bit of a truncated panel today because the Viceroy had a little bit too much partying going into New Year's. He's voiceless, so he couldn't join us today, but we'll have him back later on this week. Don't worry. In the meantime, I am joined by my usual boon companions, starting off with the man of much New Year's merriment out there in scenic and lovely Maine, Mr. Andrew Giovinazzi from the land o' the pit. Mr. G, welcome back to the show, sir.
It's good to be here. Thank you very much. By the way, what does a partying Viceroy look like? I'm guessing
there's a very festive hat involved.
I bet the hat is big. You know, did you ever see that in San Francisco? They had that play where they wore those really huge hats. Oh gosh, I can't even remember. It's been running in San Francisco for like 50 years or 40 years or something. I wonder if it's on like the order of magnitude of those hats. They were like 4 feet high hats that would cause the Viceroy to lose his voice.
Probably something in that order of magnitude, I would imagine. I can't see him doing much less on the New Year's.
Yes, I have to Google that so all the listeners can visualize the Viceroy in a hat that's like 4 feet high.
There you go. A little Photoshop magic, and it'll be perfect. It'll be a cover art for our show going forward.
But Maine is getting cold and frosty, and the ponds are freezing, and there was a day like some of these rivers and stuff, you could just go forever on them. They were all perfect sheets of icy glass, which was very nice.
There you go. Sounds like heaven to you Mainers. And also joining us, also a fan of the shiny, icy stuff this winter holiday time, maybe busted out the snowmobiles. We'll have to find out. None other than Uncle Mike Tosaw from RCM Wealth Advisors. Happy New Year to you, sir. And did you indeed bust out the snowmobiles? Not a lot of snow yet, but maybe in some patches out there in the hinterlands you guys could make do.
No, I still need about 6 inches to bust out the snowmobiles, and that's even on the lower end, or from what I feel comfortable with anyway. But with the snow we got coming tonight, possibly, there might be some snowmobiling around my neighborhood.
There you go. Everyone's happy. We had a nice, so far, pretty tropical, pretty warm winter so far, and now we get a little bit of snow, so everyone's happy. We get happy in the early part. Uncle Mike gets happy in the latter part of winter. Everyone's happy. Meanwhile, you'll all be happy that we're going to keep on rolling right on into the first trading block of 2015.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, you know what it means. And in case you're joining us for the first time here in 2015, well, welcome to you. B, go check out those 300 some odd episodes there in the archives. A lot of good stuff there for you to peruse. And C, let's start off the new year. And it wasn't exactly the most awe-inspiring start to the new year, at least for us. Of course, we had a session last week. There was no show on Thursday, but for us here coming into the new year, this is indeed our first session on the old option block, and it wasn't exactly a resounding one. Most of the major indices selling off pretty hard. A lot of tax selling going on here in the beginning of the new year. Most of the major indices down over 1.5%. S&P down 1.6% today. The Dow also down 1.6%. And the Qs, the laggard, only down 1.3% today. Fixed cash ticking up a wee bit, a little over 2 handles actually, or about 12% on the day. A percent of a percent, I know, blasphemy, but c'est la vie. And for those of you playing the home game, we are recording this today, Monday, January 5th. So interesting stuff, a lot to remark on, a lot going on here in these first few sessions of the new year. Perhaps we'll mix it up. Uncle Mike, we'll start with you. What really caught your eye in today's whirlwind of downside activity?
All right, so what I like to do is sell the S&P calls a lot of times the last day of the trading year. And the next year, I like to wait until I see some type of a green market or some type of a higher market. And I'll miss out on the first day or two if we have an up market that day, but that's fine. But this is kind of one of those rules that in 2008, it was very beneficial to me for obvious reasons, having been out of the market for a lot of that downturn for the S&P strategy. So far this year in the S&P calls, I'm still flat, and I'll go through some of my re-entry points once we get to the strategy block, or potential re-entry points once we get to the strategy block. On the S&P long SPY long put, I'm long the 199 puts for the time being, so pretty tightly hedged at the moment. So I like this market. I think this will be a buying opportunity overall, just because of the fact that there's really nothing that I would say is really overheated in this marketplace. It's not like in the 90s when we had all the overheated tech names. It's not like in a few years back when there's nothing that's really overheated right now. Everything's gone up rather steadily, with the exception of Apple, of course, which we can talk about in a little bit as well. But for the most part, I think we have a buying opportunity based on today's market. So I'm excited, and I'm just waiting for an entry point wherever it may come.
Yeah, Apple taking a little bit more on the chin today than the rest of the market, down about a little over 3 handles, or almost 3% here on the day, which is about a percentage point higher than the rest of the market, perhaps reflecting the strong concentration of a lot of retail and others in that name. And again, perhaps the increased intensity of the profit taking out there in that name. Still interesting stuff to watch here across the board. Speaking of watching stuff, Mr. Rock Lobster, what caught your eye here in one of these first new sessions of the new year?
The thing that caught my eye is just the basically sort of the reasonless sell-off. Okay, price of oil is going down. I could see how price of oil starts going down more. There could be domestically that could hurt jobs. I mean, that's real. So that's not great. I think the biggest problem is that oil has not found a bottom yet. And my own, as far as strategizing for volatility goes, is the market does not like uncertainty at any real particular time. So the oil price slide makes people uncertain. And even though it's supposed to be good, I don't know how good it's actually supposed to be. Consumers like it. The next part is this uncertainty about the euro, Greece. My guess is this is usually about the time when Mario Monti steps in and says, Greece is not leaving the euro, essentially. And that's usually when we have seen the parabolic launches into the stratosphere, or maybe just get back to some of the levels that we saw, I guess the week right before New Year's, right, when we traded, 209, 2092 on the SPX. We didn't quite get to 2100, but we got close. And we're a full, 70 handles below that now. So I guess long story short, we have some volatility. We have the market moving around a lot on things that might happen, but so much so, not so much on things that are happening right now. And Mark and I went through the S&P 500 this morning in our pit report, and we looked at the top 20 stocks. The only high PEs in there are Facebook and Bank of America, probably mostly because they're getting sued by the government. They're paying legal bills. And then, Google trades at a 29 multiple or something like that, which, considering how Google grows, that's actually not totally unreasonable. But other than that, you got Apple, Exxon, all these stocks that have, PEs in the mid-teens. So stocks as a whole don't look super expensive in the S&P 500, even though it's jumped so much. So I think as far as, there's just, for whatever reason, people are worried about Europe. They don't like the uncertainty, anything uncertain around the euro, because that creates that kind of destabilizing thing that everybody's freaked out about from 2011 and 2012. And that makes people panic. So, and I think that's where we are. Skewing the indexes, I think, is at a 2-year high. So I don't think people are really leaving their longs as much as they're just buying tons of protection in case we hit the road. The market hits the road, that is.
Yeah, we're seeing that in a lot of names these days, not just the aggressive sell-offs, but of course a lot of the very popular retail and other names taking out the chin a bit today as well. We, of course, saw Facebook turning down about the same amount as the market today, about 1.6% selling off today, closing at 77.21. A lot of reporting over the past few sessions, particularly from Bloomberg and others, about the premium that is starting to bake into some of the puts out there. According to the Bloomberg folks, they looked at the puts that are about 10% out of the money puts versus the calls, as you are wont to do when you're looking at skew and a lot of these types of names. And they said it was about a 3.1 point premium for the puts over the calls, and it's gapped up to about 3.3 vol points. That compares to their average they've looked at over the past year for about 1.3 vol points. So 2 vol points overall doesn't sound like a heck of a lot, but in net percentage terms, it is a decent amount, and it perhaps is showing a bit of interest and a bit of concern, perhaps, like Andrew was saying, in people not worried about the broad market so much as the big FB perhaps turning on a bit of a dime here in the new year. It got a high of right around in the low 80s here, about 81 back in right around Christmas time, and ever since then has been trending south, of course, trending south with the rest of the market as well today. Mr. Andrew, I know you guys like names like Facebook and others in the old pit chat. Was this a point of discussion today, the increasing premium out there in the Facebook skew, or did you guys look past this?
We didn't look at the skew, but I thought premium was kind of inexpensive a couple of weeks ago. We actually kind of bought a long strangle, but it was long a lot of deltas basically, and it's just sort of kind of petered out. Now all the deltas are gone, so we're also dumping the puts at this level. It hasn't worked out too good, but the vol's gone up. Had we just kept it to kind of a delta neutral one, we'd be really happy right now.
That's what you get for playing with deltas. What are you doing?
Well, it was deltas at the top. It was a little kind of a momentum thing. And it hasn't worked out so good yet. We got a lot of time, but I would say right now, getting back to even would be nice on it. But as far as the Facebook vol got real cheap when it was trading at its basically all-time highs again. So, and it was looking good, but right now it is kind of just getting whacked with everything else. Although this morning, all the social media stocks actually were up on the day for a while. So I think right now, anything that has a ticker symbol basically is being sold, except for a vol product.
All the social media stocks were up because I finally decided to announce my personal entrance into social media, and therefore they all rallied as a result. Clearly, that must have been the big driver on that one. Either that, they're like, man, what are you doing? 7 years late to the party. But Mr. Tosaw, I know you don't play a lot in Facebook. I'm sure some of your clients like to dabble, or at least are interested in that every now and then. What's your take on this perhaps growing bit of concern out there in FB land, at least when it comes to the puts?
Well, I think that not necessarily what interests me about Facebook is I want to see how it compares to Twitter over the course of the next year. Because if you look at a chart of the two of them, and now my chart's not coming up. All right, I'm flying blind here, but just in comparison to the two of them, Twitter and Facebook, just in terms like how a lot of people use Twitter for a news source, how people use Facebook as a way with which to keep in touch and show pictures of their kids to family members and that type of thing. I'm curious to see if the two of them can kind of head into closer directions, because the two of them in a lot of ways just kind of were going in opposite directions. And so I think that I'll be interested to see in the coming year how those two can kind of relate, come closer to one another for better or for worse, for that matter. In terms of the puts, with the concerns that are going on with Facebook, I think that with you on Facebook now, Mark, I don't see how it can possibly fail.
Yeah, that's got to be the contrarian point they've all been waiting for. Sell your Facebook if at all possible, sir, because it's now the time. The worm has turned. Indeed, all the haters are even finally on board, which is a scary, scary thing. Speaking of the haters, you're right, Andrew. The haters are out en masse for oil here. Still just trending south here. No support in sight. Down below $50 a barrel for the first time in about 5.5 years. That's the WTI out there, but the others are certainly following suit there. That's the first time since April of 2009 we've seen WTI hit that level. This is really starting to become an interesting story. I mean, it's been an interesting story. Obviously, we talked about it a lot, but just the continuing downside in this product is really, I think, taken a lot of people by surprise. Certainly to this extent, when we hit from the mid 90s down into the low 80s, everyone was kind of like, okay, that's a bit of a retrenchment, not the end of the world. When we started getting into the 70s, people started to get a little bit concerned, and it just kind of has gone off to the races from there. The Saudis and others refusing repeatedly to step in at 70 and 60 and below. We're starting to hear rumblings out of Iran now that they're starting to lean on the Saudis because they literally cannot fund their economy with oil at these levels. So perhaps having some unintended consequences of all this refusal of OPEC to jump in. Of course, they've been aiming a lot of this at the domestic U.S. suppliers, trying to cut into their market share, but starting to squeeze others as well in the region, perhaps not their intended consequence. Maybe they didn't even intend it to get this low. It's an interesting thing just to see the piling in here in crude. Have you guys been lighting up anything in the pit over there, Andrew, in regards to USO, or are you kind of just playing the wait-and-see game right now?
The trades we have that work the best is we were basically just buying put spreads in USO and selling out of the money puts or put spreads in some of the energy producers. And that has worked well because the skew is so cheap or expensive in USO that it produced.
I was going to say cheap. Which one am I'm missing? I'm looking at the wrong one. Where do I get the cheap skew? I want it.
What it did is it gave you very cheap put spreads. And since oil has been very kind, a lot of the energy producers have slowed down the decline, or you can sell a lot more out of the money juice there because the vol is so high. So overall, that worked out okay. But now here toward the bottom, it's probably feels like everything's getting a little more stretched. So as a strategy, I don't know how well that's going to work, except if you just want to sort of take delivery of energy stocks down here. But you can get them at, 5-7 year lows. And as we know, people are eventually going to start using oil again at some point. But until they cut production, the price is going to keep going down because, there's a lot of oil sloshing around and they want to sell it. So it's kind of this has happened historically several times. So right now it's not any different. You get a lot of production when the price gets high and the technology finds new ways to drill it. And until somebody cuts production, the price is probably going to keep going down because that's what happens in a market clearing function. It just keeps going down until you find a buyer.
I like oil at these levels. I like oil stocks. I think I talked about it on the show a little bit last time. I'm getting clients into XLE right now. Very small position. It's one of those ones to where it's such an unpredictable thing to where I think it would be difficult to hedge it. But I really like XLE at these levels. I got a little bit more exposure to it today, as a matter of fact. So I think that XLE could really have a lot of upside in the coming year, just because like what Andrew had talked about before, even when you're placing your bet on something that's likely not going to go out of business after a massive sell-off, it's usually worked out historically.
It does. I can't disagree. I've been adding stuff myself over about the last week, so not huge. Same thing, just kind of, because it almost feels like every time it looks like it looks like a good level, it goes. So it's what I would say. This is a longer-term trade.
I will say this for all the soccer moms and others out there driving those massive expeditions and Escalades with 3 rows. If you're not already loading up at this level here with WTI south of 50, you're so aggressively short oil anyway in your life that you got to put on a little bit of a hedge here and just take some of that off the table. The rest of you, if you're driving a Prius, maybe you can wait a bit. But if you're one of those mega oil hogs, then you should be taking the opportunity to hedge some of that exposure. We talked about that in the last show as well. We are all naked short oil at the end of the day. Some of us much more so than others. Moving on to some other topics that are big this time of month and this time of year, certainly. It's that time of month and that time of year when we look back on the year that was from an overall options volume perspective. And the year didn't start off really, a lot of people thinking it was going to be a knockdown, drag-out home run, but it was a pretty robust year overall for options volume. The numbers are in from the OCC, that's the Options Clearing Corp, and they put together that's their total contract volumes, that they clear a bunch of things in addition to listed options. They clear futures now and some swaps and other things. So overall, their net volume's up about 4%. That's, of course, including all the other stuff, stock loan, a bunch of other things they lump into there. When you get into the stuff that interests us, the exchange listed options also up about 4% in 2014, 4.265 billion contracts. That's billion with a B. It passed the 4 billion contract mark for the 4th consecutive year. 2014 was also the second highest options volume year on record, behind 2011. If you guys remember back then, that was a pretty robust year as well. But if you take 2011 out of the equation, it was indeed the highest volume year on record. Total in December volume was up it was 354 million contracts, up about 11% from December of 2013, excuse me. And the ADV net for 2014 was also up about 4%, surprise, surprise, to just a hair under 17 million contracts a day, 16.92 million contracts a day. Interesting little stat, too. Also, about $1.2 trillion in total options premium changed hands in 2014, the 8th consecutive year with 1 trillion or more in premium changing hands. So interesting stuff going on. I think a lot of people, particularly in the middle of the year, we saw a decent end to Q1 into Q2 with some of the Ukrainian stuff. In the middle of the year, kind of sagged. Then we saw some volume returning towards the latter half of the year. But overall, a lot of people going into the year didn't think it was going to be that strong of a year, and it turned out to be a pretty decent year, particularly with the broad indices rallying as hard as they did. That's usually not a good sign net for options volume. People tend to just buy the underlying when the market's rallying. Vol comes in, not a lot of incentive to sell options. So a lot of the primary drivers for options volume were not in play last year, and yet we still saw some fairly decent numbers as a result, which I think surprised a lot of people. Anything on the overall numbers before we dive on into the odd block, gentlemen, Uncle Mike, or Mr. Rock Lobster?
Nothing on my end.
Yeah, just that they're, hopefully that's just more stuff for Mike and I to do. More education, more clients.
1.2 trillion in premium. Some of that's got to trickle back to us, right?
I don't need a lot of it.
Isn't that how it works?
I'll take 1/10 of 1%.
There you go. Not a greedy man.
Nope.
All right, and with that, I think we're going to bring to a close this first trading block of 2015 and move on into our inaugural odd block of 2015.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, that funky tune means it's time once again for, I know a lot of yours favorite portion of the program. No offense, Uncle Mike and the strategy block, but it is indeed time for the Odd Block, the portion of the show where we break down the weird, the wild, the woolly, the wondrous, sometimes just wizard-like activity we see out there in the old options market. See how many W adjectives I can throw out there on a daily basis. Going to kick things off in not our usual stomping grounds for unusual activity, but it's a new year. Thought we'd turn over a bit of a new leaf. Going to kick things off in Italy, actually, which I can't remember the last time we did that. In particular, it is the iShares MSCI Italy Index ETF, ticker symbol EWI, closing today $12.94, down about 70 cents or a little over 5% on the day. It's the name that doesn't do a heck of a lot of paper, just a hair shy of 1,000 contracts a day. Still, from an odd block perspective, that's fairly decent. Doing nearly 5,000 today, about 4,800 contracts. And what caught our eye today, remember I said it closed right around $12.94, was some near-term upside paper. Surprise, surprise here in the old odd block. Some upside call paper. In particular, it was the Feb 14s that caught our attention. We profiled two large blocks on the site this morning, going up for prices between 20 and 25 cents. Paper buying, total of $22.50 in those two blocks, and then another about $12.50 piling in for a total of about $3,500 going up on this strike today. All this open in paper because only 30 contracts open on this strike. So a pretty interesting play to start the new year off here. Some upside love here in good old EWI. Mr. Rock Lobster, I guess a good way to kick off the year. We're going to a little bit more scenic, exotic locale, but the paper is still some upside love. So what do you have to say here about our first bit of upside love here for 2015?
Well, as far as Italy goes, I love the clothes, the cars, and the pizza. I like the wine too. I was looking at this. I thought this was kind of to me, this is the Mario Monti trade, as in that guy comes out and says, we're going to do whatever it takes to defend the euro or whatever. And the market's just, how many times has that happened over the last 3 years? Like, where markets just go, I guess all the algos come in and just buy everything. To me, that's kind of what this trade feels like, where they're going out to February, they're trying to buy past the Greek elections, and let's say as early as, I guess, December 8th, the EWI was trading $14.80. So that could make this trade a potential quadruple, right? If we kind of get back to that level again, but right now it's trading at basically, I think this is the lowest level we've seen since like the bad old days when everybody thought the euro was going to implode. So this is definitely at very, very, very low levels for 1177 was low. So only, it's 10% away, but that's it's again, somebody's playing a bounce and they're hoping that Monty steps in, and everybody basically accepts that, you know what, the euro is going to stay together, but it's not going to grow fast because it has to restructure all their goofy old labor laws and, stuff like that. And he is not going to provide any more liquidity than necessary to do that. He's not going to load up his balance sheet, I think. But when he does make these pronouncements like Greece is not going to lose, we're not going to lose Greece, then shares of the Italians go up. This also could be they have a budget coming out. Again, a lot of plays where it wouldn't take much for this index to get back to that level. So like on that note alone, it's kind of a savvy, long gamma upside trade, I think. It has potential.
I think someone just discovered the joy that is Chianti and decided to get long some upside because they realized Italy is due for a bounce once the rest of the world makes that.
These guys invented this? They're brilliant.
This stuff is brilliant. Upside, get some. All right. Speaking of brilliant and perhaps not so brilliant products, I'm surprised this one's getting some love, but it is. So we'll profile it here. First time here in the old odd block. This is Lifelock Inc., ticker symbol LOCK, LOCK. Closing today, $15.24. Down about 65 cents or about 4% of the day. You know these guys. These are the ones that have all the commercials out there saying we'll lock down your credit cards and we'll lock down your social security number and everything else. So if anyone tries to make some changes, apply for credit in your name, then we'll shut them down and make it a lot harder for them to do so. An interesting product. I know it has some flaws. This is the one where the CEO is running around putting his social security number out there for everyone to see. But still interesting stuff. This is the name that does about 1,500 contracts a day, so not bad from an odd block perspective. Doing about 21, nearly 22,000 today, so well over 10x for today's ADV. A lot of paper. We started off the day profiling one trade. Looks like a mega trade came in on the tail of it. Maybe we'll get into that a little bit too. But we kicked the day off here on the old site looking at the Jan 15 calls. In particular, we saw a pretty sizable chunk going up, about 2,000 in one large block over there on the ISE for 50 cents paper buy-in. And again, only 200 some odd contracts open on the strike. So clearly an opening trade, and not a bad level either, because they went out 60 cents at 75. So vol coming up on that strike, regardless of what's going on out there in the old underlying. We also saw a pretty crazy trade go up here as well, Andrew. I'm not sure. Looks like it's probably closing. We didn't have a time to profile this on the site, but it also looks like about nearly 16,000 of the Feb 14 puts went up as well. These are out-of-the-money puts went up. I don't have the exact prices on those. 36,000 open on that strike, though, so it looks like that is perhaps a closing trade, or perhaps maybe adding in as well. I'll have to dig into some time and sales perhaps while you're chatting. Mr. Rock Lobster, what you take first on these calls that we profiled and the puts that we didn't, but are still kind of interesting?
I think LifeLock is just basically sold off hard from the 19 level not very long ago. So I think just people are playing a bounce. I think even that Feb 14 looks like a put seller. And if it's a closing put seller, they're probably like, well, the stock isn't, it's made its move down. I'm taking my money and I'm going. So that's what it feels like here.
And also some upside love on the calls as well. People loving those calls as well. So a little bit of a two-sided paper here going on in good old LifeLock. An interesting name, one we don't profile a lot, but does some interesting paper. So maybe we'll be seeing this one again. I've heard mixed things about the efficacy of that product. Of course, we're not here to judge the product. We're just here to judge the paper. So interesting stuff. Probably keep an eye on this one. I'm sure they'll be popping up in the old odd block again. What was that, Mr. Andrew?
The stock moves around a little bit. So
a wee bit.
It is a mover.
So that tends to help as well with the odd block. A little bit of underlying movement. We'll probably come visit you then sooner or later if your stock moves around. All right. And last up here on the old odd block, a name, I'm trying to think of the last time we talked about this one. It's been quite a while. This is Lumber Liquidators Holdings, Inc., ticker symbol LL, closing today, $63.08, down about 70 cents or about 1.1% on the day. So the name, you've heard of them, so they do a little bit of paper, about 4,000 contracts a day, doing a little over 31,000 today, so nearly 8x on the day here for LL. And what we saw in particular was a pretty sizable roll from Jan out to Feb. On the put side of the fence, it started off with the Jan 60 puts going up when we profiled them 13,600 times, total of about a little over 14,000 going up on the day on that side of the fence. Looks like some of these prints were taken down and then reprinted, so that kind of messes with the totals a little bit. But it looks like on net we saw paper coming in, selling to close the Jan 60 puts. There's about 14,000 open on that strike, so it fits pretty nicely with the paper flow. And then rolling on out to the Feb 60 strike to reestablish with just a hair under 14,000 as well, 13,978. Of the Feb 60 puts, they did the spread net for $4.10. 1,900 contracts open on the Feb strikes. Looks like we have a friend out here either with some size underlying or a bit of some short interest, short concern here in Lumber Liquidators, perhaps a bit of a spec. Either way, not getting the movement perhaps he wanted, or perhaps still a little bit concerned about downside against his stock position and deciding to reestablish here into the February time period. Looking at a chart here of good old Lumber Liquidators, and it's not exactly the worst level to be getting in on here. It has been south of 60, but it hasn't been there for a little bit. It's been about a couple of months since early November since it hit those levels, but it could easily retrace there in this period. Mr. Rock Lobster, take us home here. What's your take on our friend keeping his puts on here in LL?
I think they are keeping their puts on, but the vol is getting pretty expensive. It's like 80 vol for this thing, or 78. For Lumber Liquidators, I mean, it's...
You got to love it. You got to love it at these prices.
Aren't they kind of like a Home Depot?
They're not really liquidating those puts, are they? They're really getting a pretty penny for those.
They are. I mean, the puts are almost, what is that, 9% of the total underlying out to February. So not small dollars. It looked like this was a straight put roll. They were along the Jan and roll to the Feb. But, man, they're paying some big dough for it. You know, and the name has moved considerably on earnings, but just real expensive. So if they're and now recently, the thing too is the name has just come off of kind of the high 40s to get to the 63 level. So if they're rolling some 60 puts, you know, they probably paid, I don't know what they paid for them, but higher prices. So I'm going to assume they must have some underlying somehow. The whole trade is, from a point of view of how they made any money, is a little confusing to me, I have to be honest. Unless they just recently bought the 60 puts, 4 days ago, and, now they roll them, and now they're spending all that money to roll. The whole thing is this head scratcher.
Yeah, the only way I can see this even making any sense, and it's a remote one, but is you have to have some underlying, and you got to be sitting on some dollars, and you're clearly willing to part with them to get another month's worth of protection. Because you're right, $4 for a mere 28 days of protection is a bit of a premium, particularly when the stock's trading $63. So this guy's clearly got some concerns, and he's willing to spend some dollars to put them at ease. So
that's what it looks
stuff.
like.
Yeah,
it's huge dough.
This has a feeling of an underlying. I'd be surprised. This is a spec, then there are cheaper ways to do it. This is an underlying. Of course, there's cheaper ways to hedge underlying as well, but this has all the hallmarks of someone underlying. Stock was trading around the 50 handle back in the last earnings in October, so he could be sitting on some money. He just gave away $4 of that $13 or so rally, so clearly he's concerned. Interesting stuff. If Alex was here, I'm sure he'd say you should sell the stock. If you're willing to spend $4 of it to hedge, maybe you should get out of some of it. But c'est la vie. I won't put words in Alex's mouth. Instead, we'll probably just keep on rolling. Usually we would keep on rolling into the Express block, but of course Alex isn't here, so I would instead just counsel all of you folks out there, if you haven't done so already, it is imperative that you do so at your earliest convenience. Surf on over to optionsexpress.com, and for the love of God, open an account if you haven't done so already. In case you haven't figured it out by now, they're the guys actually paying for this show. They're the ones who make sure this show comes out twice a week, and it has been doing so for over 4 years now. So that's a heck of a lot of free content that they have provided you guys with over the years. So, go do them a solid. Go thank them. Go surf on over. If you haven't opened up an account yet, go check it out. Open up a paper trading account, kick the tires, open up a real account if you're feeling gutsy and you like what you see over there, and then fund it. That's a big point, of course. You don't need a ton, just a little bit of money to get the ball rolling. And of course, if you haven't done so already and you are an OX client and you like the show, then let them know that you listen. Surf on over and say, hey, we love that you sponsor the odd block. You should keep, or indeed the whole show, the option block, and you guys should keep doing so. It's always good for them to hear feedback like that, because they like to see that their stuff is effective and that you guys are actually listening to it. So if you haven't done so, surf on over, optionsexpress.com, open an account. If you have one already, just shoot them an email. Say, hey, I like what you're doing with the show. Next time, maybe you call up for support, or you call the trading desk. Say, hey, by the way, love the option block program. It means a lot to them, and it certainly means a lot to us as well. So that can be your New Year's gift to them and to us. A way to thank them and us, indeed, for 4 great years of content. Put a little note into them saying, hey, we like what you do. We hope you keep doing it, because that's the only way that they know. At the end of the day, they need to hear from you guys. So by all means, surf on over, www.optionsexpress.com. Check it out for yourself. I think you're going to like it. Meanwhile, we're going to keep on rolling, because it is that time of the week into the strategy block.
It's time to dispense options wit, wisdom, and education. It's time for the Strategy Block.
All right, and Uncle Mike, you're in a bit of an unenviable position. You, of course, knocked it out of the park with your final strategy block of 2014. It was epic by pretty much any definition of the word. And now you're in a bit of a rough spot, having to live up to that very, very high bar you set at the end of the year. Let's see what you have in store for us, sir. The floor is yours. I defer to you. Let's see what you can do. Can you knock it out of the park twice in 2 consecutive strategy blocks?
The last one with which I did, I don't know if I'm ever going to be able to match that one. I'm still huffing and puffing from how out of breath I am from that a couple weeks ago. But today what I want to go through is just expand upon what I was talking about a little bit in the trading block in terms of some entry points for the S&P. Right now, I'm not much of a technical analyst. I never claimed to be, but the fact that I actually look at charts makes me the technical analysis expert on this show, it seems. So I want to give you some ideas of what I'm looking at right now, why I'm looking at it, and the benefit or the risk in looking at it. So like I said, in the SPY call strategy right now, I am flat, meaning that we actually have no exposure to the S&P for the S&P calls right now. If the S&P goes to 0 tomorrow, c'est la vie, as Mark Longo would say, it really wouldn't matter too much for the clients in that strategy. But at some point, being the ultimate eternal bull with which I am, I got to get in again. So when would I get in? Well, first point of entry of where I would get in would be to the upside. If the market stays the same or goes down, I'm an obvious genius. But if the market were to go up to 3,000 on the S&P, I'm an obvious idiot. So how do I prevent myself from becoming the obvious idiot? Well, the entry point with which I'd like to see is 205.54 on SPY. That's what the market's closed at last year. So until we get to that level, I'm probably not going to stay. I won't get in to the upside. There's an old saying, buy the dump, sell the hump, don't diddle in the middle. And I'm trying not to diddle in the middle right now, so to speak. Now, if we just stay the same or we don't touch that level, I'm in cash, market doesn't go anywhere, no harm, no foul. So if the market comes down, at what level would I like to see it and have it be an opportunity? Well, the first level I'd like to see would be 2,000 in the S&P or 200 in SPY. Nothing here is exact, but this is just to kind of give you a general idea and why I'm looking at it. 2,000 is a key number, as is 200 in SPY, because of the fact that it is a big round number. And also because of the fact that we have actually had some type of little bit of support along those lines through August as well as September. And we also bounced off it a little bit in this mid-December sell-off with which we had. So I think that's reason to consider getting back in at the 200 level. Will I do it? Who knows? But that's one thing with which I'm considering. The next level with which I would consider getting back in would be probably around the 198 level in SPY. Same story. It's not quite as bold of a number as the 2,000, but from a charting standpoint, it does actually show some support around those levels. And then after that, the next level with which I would consider getting back in would be around the 190 level. Around the 190 level. We do have a little bit of support around that level, but not a lot. Where I would love to get in would be around the 188 level. And the reason is because it's not necessarily based on the chart. It's because of the fact that that would give us a 10% pullback from the all-time highs. If we get something like that, that is significant in my opinion, and I think that's a very good buying opportunity. Now, what determines whether I would get in or get out? If we gap down tomorrow below the 2,000 level, probably not going to get in. It would be like catching a falling knife. What I'd like to see is have us go down to the 2,000 level, let's say, and have it kind of bounce around a little bit and then start coming up, and I would buy in on the way up. That's kind of what I'm looking for at this stage. I'd want to see some type of stability in the marketplace. I'm not into catching falling knives if I can help it, and that's how I would try to avoid it. So if we get to one of those levels, that is when we'll get back into the market most likely. Or maybe I'll just say, you know what? We're just going down so rapidly fast and the market's going to go down to 0 and the world's going to end. We're going to end in cash. Who knows? Anyway, that is what I am looking at going into the coming weeks in January on the S&P.
Thank you for that, sir. I'm glad you could save some breath for your next upcoming mega epic strategy block, which I'm sure you are working on diligently into the wee hours in the morning as we speak. I know all of our listeners are looking forward to that. Meanwhile, speaking of looking forward, it's time for us to keep on rolling into our final segment here for this inaugural show of 2015. Yes, it's time to open up the Around the Block segment.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. This is indeed the portion of the program where we tell you what we're watching for the entirety of 2015. No, just kidding. What we're watching for the week to come from an options and a general market perspective. A lot of things to talk about. If Alex were here, I'll put some words in his mouth. I'll just say 10-year, 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 macro, macro, macro. There we go. We're done. Alex has had his say. Now we'll move on to the rest of you guys. Uncle Mike, we'll start with you. What are you watching in addition to all of Alex's fun macro stuff?
Oh, I want to see what Draghi does in Europe, see what Greece does. I also want to take a look to see how this pans out with the dollar. What's interesting today is even though oil got royally clobbered, if you look at my beloved metals, they're actually up on the day. So curious to see how gold relates to what's happening with our economic policy, not only with interest rates at home, but also in Europe, and in comparison to what's happening with the slippery stuff. So this is going to be an interesting month, and if this month, I'm very confident that you will be very excited watching market action this month. So stay tuned. I think this is going to be really fun.
Certainly are a few things to keep an eye on this week. Speaking of which, Mr. Andrew, what are you keeping an eye on for the rest of this week, sir?
Well, we have a non-farm payroll number, I think, Friday. So we have ADP on Wednesday. So there is some employment stuff coming. That usually vol tends to bid a little bit into that, although the employment picture has turned kind of okay lately. So it doesn't look like that big of a deal. The next part I would say is, when do all these oil stocks stop going down? Because they still, I think they're all pretty much hitting some 52-week lows today. Or if not, some are, some aren't, basically. So those are, I think, what's really driving it. And then, you've got whatever's going on in Europe, right? Because the Europeans, they're what the Europeans are, we started 2 world wars. So I don't know. I mean, it's like they can't agree on anything over there. So and I think that's really causing the instability in the market, because it isn't any domestic news. Just when anything like the dollar gets super strong, all of a sudden anybody that's borrowed in dollar denominated made any dollar-denominated loans. Some countries or businesses might get worried, so that might spook the fixed income market a little bit, the high-yield fixed income market, and that tends to trickle down to the equities, where when you got to raise money, you sell the stuff that is worth the most money, and that's kind of what it feels like is happening right now. So I don't expect any of that really to change until something sort of stops. It feels like, again, you've got the sort of the rubber band play going on, where the market kind of keeps selling off because there's some worry. Oil keeps going down. It's just day after day. It's kind of the same thing, and which is, or Mike's point is good. I'm not going to stand there and just wait in and buy it right now until I see a reason for all those actions to stop. And right now, I'm not really seeing that yet. So we'll see. But I still think the economic news here is pretty good. And, the market probably should be bought on dips at some point. You just got to wait. I would prefer to see things bounce before I jump in. We're just not seeing that yet.
I like it, Mr. Andrew. Still bearing a grudge for the big one and the big one part 2 and those darn pesky Europeans over there causing all of these issues for us.
And now they're causing us more problems.
I like it. All right, that's a good one to end the old Around the Block segment on. It's also a good one to end this inaugural episode of the Option Block here for 2015. But before we go, as always, let's check back in with my cohorts here, my partners in crime on the old Option Block panel. see what they have cooking that may interest you coming here in the new year. We'll kick things off. Viceroy couldn't be here, so I would just again encourage you, surf on over to optionsexpress.com if you haven't done so already. Kick the tires, light the fires, play with all these cool tools that Alex is always talking about. The walk limit order, a very cool one if you're a busy trader. I know a lot of you guys are out there. You have day jobs. You can't babysit your orders all day like Mr. Andrew sitting in his chat room working orders all day. You have a job, so you got to use some tools. The walk limit tool can certainly come in and help you out, as well as some of the cool things we've used on this show in the past, like the trading patterns. We use it for a guessing game, but you guys can put it to a lot of other fun uses as well. Surf on over www.optionsexpress.com and check it out for yourself. And Mr. Rock Lobster, we'll start with you. What's coming down the pike here? Give us a tease for the new year in the land of the pit.
Well, we have our biggest, we're going to have options for stock traders on the 17th. I'll be doing that webinar with Mark. Basically, and it's not too different from a lot of the things that Tosaw talks about, is you're going to use the option the right way, where you use the leverage and the protection factor to do the stuff you want to do, but, generate a lot more leverage for when the times you are right, and be able to control, losses when you're wrong. So that will be on January 17th. You go to optionpit.com/events and sign up. It's a good deal. And it's basically, again, the idea is to learn how to use options the right way. And we're going to do also this year, this will be the year we'll do the more advanced, shorter webinars. These are probably more aimed at people that have been trading for 3 or 4 years that want to look at some advanced strategies. And not that they're complicated, it's just that you might need portfolio margin, or they're not, they're a little more creative use of options than, buy rights and stuff like that. We'll also be talking about conditions. So you'll see a lot of those, what we'll just call advanced webinars at Option Pit for people that want to, let's just say, take their trading to a new level. So.
All right, and Uncle Mike had to run, so on behalf of him, let me encourage you also to surf on over to RCM, figure out what they have cooking over there. They have RCM Wealth Advisors, they have RCM Futures. Take your pick. A lot of cool stuff they have kicking around over there for you guys to check out. And on behalf of the Viceroy and Uncle Mike and indeed the Rock Lobster, and of course, myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show, for making 2014 such a great year. We're looking forward to another banner year in 2015, and we'll see you next time right here on the Option Block.
The Option Block was brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.